What's up everybody? Welcome to the Stocks channel. My name is Corey and today we're going to do macro technical analysis looking at all of the indices, the VIX and Bitcoin. Today we'll try to answer the question, is this bull market finally dead and we're going into a bear market? First up, let's take a look at a weekly chart of the SPX S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. Alright, so we're looking at a weekly chart of the SPX. So remember, every candlestick does represent one entire week's worth of price action. So I'm going to start out this week's episode looking at my time cycles because these time cycles have called very important market bottoms. The first thing I want you to look at in this time cycle study that I have here is that we are at the bottom of this study, which is right around the middle of January. So we would expect to see a possible bottom coming in the very near future and a very impulsive bull rally coming out of this hole. Now there's always the possibility that the bull market is dead and the next rally will actually be a lower high before more downside. So you can see based on this time cycle study, we are expecting to see more upside in the near future, even if it's going to form a lower high. Now you can see the last low is in June of 2021, and we had a very strong bull market, so there wasn't really a sizable dip during that period, but it is important to note that we continue to trend higher after that cycle low. The next low was back right before the election in October of 2020. That did call the bottom, and we did have a very strong bull market coming out of that low. And then if we continue to go back in time here real quick, you could see the previous low was the March crash in 2020. And you can clearly see that called the bottom to the very exact week. And then we had the very impulsive bull rally coming out of that. If you continue to go back in time here, you can see it did call very important bottoms. And another one of those very critical bottoms was December of 2018, where the market capitulated and then proceeded to go back into another bull cycle. So you can see this is a very important time cycle study that we don't want to ignore. And the reason it's so important to pay attention to is because we're currently at a time cycle study at the bottom of the low right now. So don't ignore the possibility that we have a very impulsive rally coming out of these lows. Okay, the next thing I want you to point your eyes to is the fact that we have reached the top of a 5-wave Elliott Wave cycle, which means we are due for that correction. We know we're in the correction now because we're starting to see the drawdown and we're coming down to the lows in the wave 4. So this means we did see the top, but that doesn't mean it's going to be the top forever, and it doesn't mean we can't form a new all-time high. So the first thing I want you to pay attention to is every time you finish a 5-wave cycle in Elliott Wave, there's going to be a correction. Typically speaking, after the correction, you are going to resume the macro trend, which we can clearly see is still bullish. There's always the possibility of a stock market crash, and there's always the possibility of a bear market. But if you're staying objective, those are usually not going to be opportunities that you want to be scared to buy in. History has said more often than not, if you're buying in stock market crashes and you're buying in bear markets, you are buying the lows that you're going to see for the next decade or longer, and you should not be scared to buy low. Remember, the Stocks Channel IQ test is that you should be buying low and not panic selling as the stock market goes higher. That doesn't mean throw all caution to the wind and just buy like a drunken sailor without any risk management. It means if you're an investor, you should be loading up the lower the stock market goes and not panic selling. So just do me a favor, and if you're too scared to buy at these levels, please do not buy at SPX levels of 5,000 or SPY levels of 500. If you're not buying low, you sure as hell shouldn't be buying the new all-time highs. So commit to yourself right now that if you're too scared to buy these prices in the stock market, that you're not going to turn around in 2 months from now buying at all-time highs. If you're doing that, you have no idea what you're doing and you need to completely reevaluate your trading plan and your investment strategy. I'm not trying to offend anybody. I'm trying to help you because when there's fear and blood in the streets, that is always going to be the best time to be greedy. So looking at this weekly chart of SPX, there is no doubt that we have broken down through the macro level bull trend line and we are going through this correction. So from here, we need to try to start figuring out where are going to be the best buying opportunities. And you can clearly see looking at this chart that we are getting into one of the best buying opportunities, which is going to be this first level right around SPX levels of 43.50. That's also going to be our weekly 50 EMA, and it is our wave 4 low from this bull cycle that we had previously. So if that level breaks down, you will want to have some dry powder for buying even lower because the next level lower would bring us down to SPX of about 41.58. Below that, we're getting very close to the bottom because the next level would be right around 4,000. And yes, we could go a little bit lower and we could come back down to about 38.78. Now, I don't necessarily think we have to go below 4,000, and I don't necessarily even think that we have to hit 4,000. I just want you to know that it's completely possible and it's not something you should rule out completely. Based on the fact that we're at a time cycle low, and based on the fact that we know nothing goes down in a straight line forever, there's very likely going to be a bounce coming in the very near future, and it's more than likely going to be very impulsive. We're not going to get in this today with the weekly analysis, but if you look at how Elliott Wave works, the counter trend rallies are very impulsive by nature, and they do have 5-wave structures, even though they are counter trend rallies. If you're in the Stocks channel Discord, I will have a members update and I will go into exactly what to expect during that counter trend rally. And also, if you're in the Stocks channel Discord, you had a video from December 5th that told you exactly when to expect this correction. And essentially it told you at SPY levels of 478, you should be expecting a stock market correction. So we're officially in this correction, and now we need to navigate our way through it and successfully come out on top coming out of it. It's a lot simpler to navigate a volatile market if you check your emotions at the door and stay objective. So watch these 3 very critical support levels and make sure that you're not buying too much too quickly. Make sure you have dry powder so that you don't get overly emotional if we do continue to dip further. Also, because we are losing the bull trend, you will want to be a lot more cautious and wait for confirmation that the downtrend is ending. If you want to wait to get very aggressive and you want to buy very aggressively on the confirmed breakout, I will have those levels for you as well. But right now we don't have any confirmation of a bullish breakout, so you should still be expecting more downside until we see that confirmation of a breakout. The time cycle study calling a low is not enough to say that we hit the bottom, because there's always a possibility that we have a little bit of wiggle room in that cycle before we see the bottom. So don't just assume we hit the bottom and we have to rally out of the hole. We could still see a little bit more weakness before we see that counter trend rally. So the last thing I want to mention on the SPX weekly chart is don't rule out the possibility that we could still be in a bull market, and after this correction we could still rally to all-time highs. It's very easy to totally forget about the scenario that's the bull scenario when you're in an emotional downtrend, but more often than not, coming out of these downtrends, we do go back to the macro level trend, which is still extremely bullish. If you look at this chart, the last thing we saw is a potential higher low because we still have not broken down through the wave 4 low. So when you see a chart that's forming higher highs and potentially higher lows, it is still a macro level bull trend, which does mean we could still form a new all-time high this year. A lot of you need to hear that, because when we get to a new all-time high this year, you're going to be absolutely blown away if you didn't think it was a possibility. So yes, it is a possibility that we go to a new all-time high this year. And yes, it's still a possibility it's going to be a face-ripping bull rally coming out of this hole, and we could still go to SPX levels of 5,000 or higher before the end of the year. So in that scenario, we would be looking for the end of this correction to call a bottom very soon. Then we would start on another 5-wave impulsive bull structure that would start to take us to new all-time highs. And yes, we could get there as soon as April of this year. Obviously, that's going to depend a lot on FOMC, and it's going to depend a lot about earnings season, so you will want to watch those things very closely. Remember that the stock market is pricing in the Fed raising rates this year, and if the Fed kicks the can down the road at any point or doesn't aggressively raise rates, the stock market is already pricing in the worst case scenario, and with inflation as high as it is, there's not really a lot of other places to go put your money and still beat inflation. So the bull scenario is still alive and well fundamentally, because if you don't have anywhere else to put your cash to battle inflation, you are still going to see a bull rally in stocks, and we're still going to see very impulsive rallies to new all-time highs. There's a lot of money on the sidelines, and after a correction, a lot of that money is going to start flowing back in because we're getting to more and more attractive buying levels. Eventually, that smart money is going to start pouring back in because they're getting a great value for their buck, and they're buying at prices that they see comfortable buying at, and that is going to lead to another bull rally. So it's not really a question of if we get another bull rally, it's really just a question of when and where that bottom is going to end up being. So the next thing we need to look at is the bear bull survey, which we can clearly see is getting extremely bearish. We're now at 46.7% of the people that are bearish and over 32% of the people that are still neutral, and only 21% of the people are now bullish. So you can clearly see that the sentiment is getting more and more bearish the lower we go, which is exactly what you would expect to see, because retail usually starts panic selling and starts running for the door during a correction, thinking that we're going to see the full-blown crash and we're going into a bear market. So more often than not, a lot of this money is going to come back into the market, but it's usually going to come back into the market at much higher prices. So normally when you see a survey that's starting to get this bearish, you want to be a lot more contrarian, and you want to start considering buying now and not buying later when the rest of the crowd is starting to FOMO in. Obviously, do whatever fits your risk management and plan accordingly, But typically speaking, if you're a long-term investor, you want to start piling in now while everybody is fearful. You can also see if we jump back to the SPX that we're starting to near that 10% correction because we're starting to have a drawdown of about 9%. So a little bit lower to that wave 4 low is going to be right around 9.7%. And that does classify as a full-blown correction anywhere in the magnitude of 10 to 15%. If we start dropping 20% or more, you're more than likely going to see the bear market, which could mean that we see a much more prolonged downtrend that could last 2 to 3 months or possibly even longer. So we are getting close to very attractive buying prices, and if you're following my daily analysis, you do know that we're trading near the 200 simple moving average, and in most cases we're even below it. Jumping over to the NDX weekly chart, you can very clearly see that we finished out this 5-wave structure and we're now in that full-blown correction, and the price action is getting a little overdone to the downside. We're below the weekly 50 EMA and we did close below the weekly Bollinger Band, and we're sitting right on top of this support level right around 14,385. So if we do break below that level, we're more than likely going to see a much deeper correction. But if you look at the NDX weekly chart, you can see that we've already corrected almost 14%. So we're well within that 10 to 15% full-blown correction range. So these are becoming very attractive buying prices because you've now had a full correction, which means a lot of that smart money that was waiting for lower prices is going to start piling in. Combine that with the time cycle low and continuing to load up at lower prices, we are more than likely going to eventually hit a bottom in the very near future and see a very impulsive rally off of these lows. So now is not the time to be getting overly fearful and overly emotional, because if you're staying objective, these are looking like very attractive buying prices. If we break below this low, the next level you're looking at is right around 14,000, and below 14,000 we could be coming down to this next low, which was the wave 2 low, which is right around 13,270. So you can see we're getting to very attractive buying levels, but remember we did lose the bull trend, so we won't know when we hit the bottom until we see a bullish price action breakout. So if you're trying to catch the bottom, you want to continue to accumulate, otherwise you want to wait for that confirmation breakout. But I can't stress it enough, now is not the time to be panic selling. Now is the time to be buying, so you need to keep that in the back of your mind. If you're questioning selling all of your long positions, just remember that there's a lot of smart money out there that's just thinking about buying. So if you're about to sell right as smart money is about to buy, you are essentially selling at the bottom, and yes, you are going to regret it because you're going to look back in hindsight and you're going to feel like you got duped because you panic sold at the absolute bottom and totally missed out on the counter trend rally. Remember, even if we're going into a bear market, there's always going to be a counter trend rally before you go any lower. And if you want to sell, you should be selling during the counter trend rally and not at the absolute lows during all of the panic selling. Let all of the people that have no idea what they're doing panic sell. You should not be part of the panic selling crowd. You should always sell your position during the counter trend rally. I'll be able to explain this a lot better in hindsight, but I'm trying to warn you ahead of time to not be part of the panic selling crowd. In 2 to 3 weeks from now, we're going to look in the rearview mirror and I'm going to say, I told you so. You shouldn't have sold down here. If you wanted to sell, you should have sold up here. So just remember, in 2 to 3 weeks, we're going to be going through this same exact scenario, and we're going to be looking in the rearview mirror, and we're going to see all of the price action, and I'm going to remind you exactly what I told you about on this exact day. So remember, eventually this correction is going to complete, whether it goes into a bear market or not, and we're going to be looking for another 5-wave Elliott Wave structure that could still take us to new all-time highs. So if you're thinking long term, these are buying opportunities and not times to be panic selling. On the Dow Jones, you can see that we clearly have a weekly double top formation, which does mean if we start breaking down below the weekly 50 EMA, we will be expecting to see a lot more downside. So it's essentially do or die for the Dow Jones, and it needs to hold up above about 34,100. If we see the Dow Jones starting to have weekly closes below 34,000, we will know to be expecting a lot more downside because we clearly have a double topping formation. So we'll need to watch this very closely because this could be a great indication that we are going lower if we do see the Dow Jones breaking down from here. Other than that, this still looks like a correction, and it still looks like the Dow Jones has been going absolutely nowhere. So eventually that will change, and we're going to see the Dow Jones breaking to the downside or breaking out to the upside. In the Russell 2000, you can clearly see that we're very close to bear market territory because the Russell 2000 has now had a drawdown of 19%. If we go much lower and we start hitting that 20% level, we will be expecting to see the Russell 2000 hitting a full-blown bear market, which does mean it can go past 20% and go possibly even lower, which means it could be dropping to about 30%. So the level I want you to pay attention to on the Russell 2000 is going to be at 19,075, and below that level we'll have one last line of defense for the bulls at 19,037. Below that, we are very likely coming all the way down to 1700, and that is going to be a very prolonged bear market. And it's going to mean the Russell 2000 is going to be a bear market for the entire year of 2022, which means we wouldn't possibly hit a bottom in the Russell 2000 until after the summer of this year. So these are very attractive buying levels if they do hold up as support. Otherwise, you're going to stop out below these levels and expect to see prices trending towards 1700. This is clearly a downtrend, and this is clearly very close to a bear market, so there's really nothing else we need to say about the Russell 2000. On the VIX weekly chart, we can clearly see the VIX is starting to get another one of those bullish breakout looks, and the last time we had this, we didn't see the VIX getting too far above 30 before we saw the VIX getting crushed, going right back into another bull rally. So at these levels, be cautious because yes, the VIX is spiking out, which could be signaling a bear market or a deeper correction. If we see the VIX starting to get crushed back down below 24, we likely saw the bottom and we're going back into another bull cycle. It's that simple, so I'm not going to overcomplicate it and talk about anything else with the VIX. You're staying a lot more cautious above VIX 24, and you're getting ready for another potential bull cycle when the VIX breaks down below 24. On Bitcoin, we see continuation of the downtrend, which should be no surprise. Remember, Bitcoin goes in 4-year bull cycles, and last year was the end of that cycle, so there's really no reason to be getting overly bullish on Bitcoin, especially when the price action and trend are telling us to expect more downside. So on Bitcoin, we clearly broke down through 39,000, so I'm looking for a retest of this $30,000 support level, and yes, it is a little bit higher, about 31,700. If that level breaks down, we could be coming back down to 20,000, and we're clearly in a downtrend with lower highs and lower lows. You can't get bullish until we break back above about 45,000, and even then we could still be forming another lower high before more downside. So watch the critical support level at 30,000 because below that we're going down to 20,000, and the bullish breakouts will be back above about 45,000 and then back above about 51,000. On the ARKK ETF, you can see we're continuing this bear market and we are going down to my critical support level at $70. It's very likely this could be the bottom, but you will want to watch the price action at that level. We can't get bullish until we break back above 91 and then confirm the breakout with a close back above 99. So this is clearly a strong bear market, so you shouldn't be getting overly aggressive on buying the dip unless you're going in for the long haul and you trust this ETF in the long term. I don't necessarily think that's a great strategy because it's not an index that I would trust long term, but if you're trading it, you definitely want to pay attention to this level down here at $70. So jumping back over to the SPX, this is going to be a very emotional time, and this is definitely looking like there's no end in sight, but I can't stress it enough that the counter trend rallies come very quickly, and they could lead to another bull cycle that takes us to new all-time highs. So stay objective and watch these critical support levels, and if they break down, you'll know to continue to expect more downside, or you can wait for the bullish confirmation breakout, which I will cover in my day-to-day analysis. So just remember, if you're thinking about panic selling, there is always going to be a counter trend rally in any bear market. I'll more than likely do a very detailed members video for all of the Stocks Channel Discord members, and I will go through all of these scenarios so that you can plan accordingly, and I will help you navigate through this correction, and I promise you that you're going to be just fine, and you're going to come out of this in a better position than you ever could imagine. Just trust the process and make sure you're staying objective and you're not over leveraging. If you were loading up on call options during this time, then you are obviously in a very bad position, but you really shouldn't be trading options, especially when there's no trend in the bear or bull direction. You shouldn't really be messing with options at all if you're not a profitable trader. And if you are a profitable trader, it still doesn't guarantee that you're going to be profitable trading options. So trust the process and make sure your strategy is going for the long term and you're not just gambling trying to get rich quick. If you're gambling, you're going to eventually lose it all, and that is almost a guarantee. That is not something you want to be messing around with. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ, and you receive all of your buy and sell alerts directly via email and text message. You can see here that Bank Trade Alerts makes money whether it's a bull market or a bear market, and even in 2008 when we had a huge bear market when everybody was losing money, Bank Trade Alerts beat the market, making over 90% that year. So if you're looking to follow a system that beats the market every year and never has a negative year, look no further than Bank Trade Alerts. You can find out all of the information about Bank Trade Alerts and how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.